I think that people have got this wrong. Everybody is looking at this event as deflationary, but it is actually the opposite. You're going to have a reduction of production, so less supply of goods, and the world is going to be flooded with money. Not just the Federal Reserve, but central banks around the world are meeting this crisis head on with a printing press, as if this is going to make a difference. It's just going to make a bad situation worse. But, we are entering another financial crisis. The 2008 financial crisis was started by a drop in real estate prices. This one is started by the coronavirus. But what's causing the crisis is not the pins, but the bubble. It's the debt. And it was because of all the debt that we had a crisis in 2008. And because we have even more debt now, this is going to usher in an even bigger financial crisis. It probably is starting officially in this quarter, although they may have to go back and downwardly revise some of the numbers. But clearly it's starting. The bear market is starting. I mean, yes, the Dow, I think, and the S&P are not quite down 20%, but look at the Russell 2000. That's down 25%. The transports are down even more than that. And so they're leading the way. And in fact, the Russell 2000, that was what everybody billed as the Trump trade. When Trump was first inaugurated, you got to buy the Russell 2000. It's a pure play on the U.S. economy. That's the major index that's doing the worst. And then if you look internally, it's the financials that are really getting killed. And the reason they're getting killed is because they're holding all the bad paper. They have made all the loans that are not going to get repaid. So this is just like 2008, only it's not just the banks that are going to need a bailout. It's the hotels, it's the airlines, it's companies like Boeing, it's the cruise lines. I mean, look at all these companies that have loaded up with debt because the Fed has kept interest rates so low for so long. Now we have any kind of economic downturn. I mean, no matter how slight it may be, and this may be more than a slight downturn, but we were not prepared for anything. We had nothing saved for a rainy day. And now, I mean, we might not just get a drizzle, we might get a downpour, but we can't even handle a drizzle because of all the rate cuts in the past, that the economy is so levered up right now and so vulnerable to this crisis. But slashing rates to zero is not the solution, right? That's more of the problem. The Fed's going to do it. I mean, I've been saying since the beginning, from before the Fed even raised rates for the first time, when they were bluffing about their ability to normalize interest rates, I said it's impossible that before they succeed, they're going to reverse course and go back to zero. When the Fed said they were going to shrink their balance sheet, I said that was impossible, that if they tried, they would have to abort it and go back to QE. And that's exactly what happened. And it's not because of the coronavirus, because if it wasn't the coronavirus, it would have been something else. And too many analysts out there are focusing on the pin, and they can't see the bubble for that pin. Forget about the coronavirus, right? What the problem is the economy. It's the leverage. It's the debt. That is the bubble that is deflating. At this point, it doesn't even matter what happens to the pin because the air is going to come out of this bubble. This is the biggest bubble the Federal Reserve has ever inflated. And it has done tremendous damage to the U.S. economy. And that damage is only going to become obvious to most people after the bubble deflates. It's been an illusion. There's never been any strength. We've had record trade deficits. We've had record budget deficits. Nothing has changed really since Obama was elected. We just had a continuation of those failed policies, and we just got a bigger bubble. And now that bigger bubble is popping. And unfortunately, Donald Trump is going to get the blame, just like George Bush. The housing bubble popped in the last year of Bush's second term, and that meant John McCain had no chance against Barack Obama. Well, the same thing is going to doom the re-election of Donald Trump. He now has no chance really against Biden because everything that collapses on his watch is going to be blamed on him, and then by extension on tax cuts, on deregulation, on a free market. And so Biden is going to come in and implement more big government solutions to big government created problems. And they're going to give the Federal Reserve even more power to do even more damage. And we're going to have a currency crisis and a sovereign debt crisis during the Biden administration, if it doesn't start before Trump even finishes his term. But that's going to be much worse than just a financial crisis like we had last time. So we're going to end up getting Joe Biden. But Joe Biden's a liberal Democrat, and he's going to be pushed even farther to the left by the Obama wing of the party. But the other problem is that during the Trump term, Republicans totally signed on to the idea that deficits don't matter. They no longer cared about how much deficits we had or how much money the government spent. So there's going to be absolutely no opposition whatsoever. When Obama was president, at least the Republicans and the Tea Party were trying to lean against the expansion of government under Obama, and they applied some type of brake to the spending. But that's not going to happen this time around. The Democrats are going to have carte blanche to spend as much as they want on ridiculous stimulus programs, and all of it is going to be financed by the Federal Reserve. They're just going to be printing money. And so, the people who think they're buying something safe by buying U.S. Treasuries, wait till they wake up. Treasuries are probably the riskiest asset that people can be buying. What they should be buying is gold, because gold is going to be the only safe haven left standing. But gold is not down at all. Gold is still positive. Over the last several weeks, since stocks really started to sell off on coronavirus and all the implications, the price of gold is actually going up. So gold is so much stronger now than it was in 2008. And if you remember, once the market stopped falling in 2008, and then the Fed really came out with QE1, and that monetary policy was out there for everybody to see, the price of gold recovered. It went from about 700 or whatever the low was. Remember, it fell from about 1,000 at its peak in 2008 to around 700, maybe a little lower. And then it exploded to almost 2,000. I mean, the price of gold came close to tripling on QE1. The only reason it stopped going up is because everybody was convinced that the Fed's policy worked, that it was a success, that they can normalize interest rates and shrink their balance sheet. Well, this time, nobody is going to believe that lie, even if the Fed tries to tell it. So it's QE infinity. The balance sheet, the interest rates say it's zero forever. And so gold's not going to stop going up this time. It's going to go through that 1,900, 2,000 high of like a hot knife through butter. And it's going to keep on rising. So, don't just, worry, hey, why hasn't it gone up? Just buy it, because it's got no place to go but up. There was a debate going on as to whether or not Bitcoin was a safe haven, a store of value, an asset that people would flock to in times of trouble and financial turbulence. Well, I think the answer is no, it's not a safe haven asset. It is a very risky asset. The price of Bitcoin has collapsed by more than the stock market during the last several weeks. And in fact, it's not even a non-correlated asset. A lot of the Bitcoin promoters, when it was clear that kind of Bitcoin had decoupled from gold and that it wasn't acting as a safe haven, then they started to say, well, its value is that it's non-correlated. But I think that argument has got out the window, not that it ever had much validity, because if you look at the way Bitcoin's been trading throughout this crisis, it seems like it's very highly correlated with the stock market. When the stock market goes down, Bitcoin goes down more. And then when the stock market goes up, Bitcoin goes up, but it goes up less. If the market won't go up on good news, then I might as well get out, because that's a sign that it's about to get killed. And I think that's what's going to happen. And I've been talking about how this coronavirus is the pin that's pricking a lot of bubbles. And it's ironic that one of the bubbles that's being pricked is the Bitcoin bubble. Instead, it's going to be the catalyst for it to come crashing down to earth, if it hasn't already crashed by the time the happening occurs.